Product focus. Energy management initiatives are key in achieving long-term carbon reduction goals, but in the current economic climate, companies may struggle to find the capital investment required to implement them. Utility team have created the Revolving Green Fund, which provides businesses with interest-free funding to deliver energy-efficient projects and technologies. We join FM consultant Scott Newland, along with James Rant and Delvin from Utility team, to explore this funding opportunity and how it can be used by facilities teams. Why is it important to protect key FM projects?
Facilities management projects are always important for the investment in property. It can be anything from replacement of key equipment like chillers and boilers and so on and so forth, because they've come to the end of their natural life, they're not operating effectively or efficiently. It can be that your lighting needs replacing because it's way out of date and again not energy efficient. And I think it's incumbent on the facility management team to find ways to still deliver some of these capital projects where it makes sense, particularly if the capital project that you are going to go forward with has an impact on the energy consumption. So I would certainly be recommending to anybody at the moment, and as I am doing with my clients across the globe, is what can we do to assist you in reduction of your energy? And how can we go about helping you procure that energy to make it more effective as well at the same time?
What solutions are available to support FMs with green initiatives?
Anything that we can do as facility managers that has an impact on the environment to reduce emissions and at the same time save energy, I think is a necessary project that needs to be one way or another still delivered. The unique thing about the utilities team is that they've created a special in-house product called the Revolving Green Fund. The Revolving Green Fund is something which utilities team finance through the energy procurement process, and the utilities team take the risk on their books rather than the energy company or the client. And it works in very, very simplistic terms. They will go to market on your behalf to a chosen number of the big energy providers, and they will get a price for your new energy contract moving forward. At the same time, during that process, they do try to learn and discover what green energy efficient projects need doing on a capital basis inside your buildings, whether that be something to do with cooling, if you can optimize your cooling or what have you to reduce the energy consumption, installation of new lighting systems which will dramatically reduce the energy consumption, more energy efficient boilers. And what they do is they build up a wish list, for want of a better word, of capital projects that you might want to carry out through your portfolio of buildings. And when they go to market on your behalf to procure your energy, they have that value of spend in mind, and they look to the energy providers to see whether or not, when you procure your energy, that the cost of those projects can be included in that energy bundle. What that means, in effect, is you will receive cash up front on signing of the contract from the energy provider to carry out these projects. So, if you do want to replace your lighting, if you do want to optimize your cooling, you have a pot of cash, a war chest, for want of a better word, that you can use to deliver these capital projects. Now, the utilities team are going to be far better at explaining that than I am. I just know that as a facility manager, I've been frustrated over the years where I know there are necessary project works which need carrying out, but quite often there isn't the fund of money to do this. So for me, this is a win-win situation all round. It means, firstly, I have to re-procure energy. So if I'm re-procuring the energy, why not do it well, do it smart, and get a pot of cash in the process to deliver these projects?
So in terms of energy solutions, I think that there are the commonplace names that you hear all the time: solar, CHP, energy monitoring, and that type of project. But what they all share is the hurdle they all fall in prey to, I guess, is how do they get them off the ground, where do they get funded from, and how you actually deliver them. And really, for utility team, what we were trying to do with our clients was, I guess, address that. We've had a long history of working with the energy reduction project, with the energy generation project, but we wanted to make it so that our clients from all spectrums were able to benefit from that type of work, and funding and access is what Revolving Green Fund is there to provide.
Yeah, look, here at Utility Team, we're an end-to-end energy consulting group. We specialise in energy efficiency, procurement, energy trading, and our experience tells us that there's a whole range of solutions. But what we also found was that a lot of the green initiatives out there typically rely on a stick approach. So whether that's ESOS, CRC, SECR, all these are quite compliance and quite a lot of headache for customers. Actually, we wanted a solution that actually is a carrot type approach. So the Revolving Green Fund that we launched last year really focuses on helping customers spread the cost of any energy efficiency or renewable measures on top of their energy bill. So it's blended into the energy bill, almost like a forward rebate.
How can reviewing energy consumption help FMs?
Energy consumption is certainly an area that facilities management can have a big impact on. As we know, energy markets are fluctuating constantly, and energy costs you different amounts at different times of the day. So simple things from facilities management like organising your cleaning regimes or maintenance regimes during the times of day when energy is cheaper, it makes sense because obviously there's going to have an impact not only on the consumption but also on the cost of that consumption. But I think more and more the whole energy management is having to become a lot more sophisticated. And working with companies like the Utility Team, who yes, they do go to market on your behalf, and yes, they can put your volume with other people's volume, so that's not new. But what they do have is a whole energy bureau in the background who are acting as your eyes and ears, monitoring how you're using that energy and proactively coming to you on a regular basis to say, over the past 4 weeks, this is your energy consumption, this is what we've seen, this is what we've realised you're consuming, and we need to identify what these peaks and troughs are in the usage and flatline those, because that will always be more energy efficient.
So I think from the work that we've been doing at Utility Team with FM clients, and when I say FM clients, for us that means various hard and soft FM businesses that work with everything from retail right the way down to public sector, NHS, healthcare, education, transport. What they all share really is a need and a requirement for consumption data and really understanding what their operation is doing at that kind of granular level. That is what informs really much more of the higher level decisions and perhaps bigger investments that sometimes get a lot of the attention, but really all of that has to be underpinned by a good core grasp and understanding of what their energy consumption is and means to them, and that's really what we're working with here at Utility Team.
I think the first thing to remember is, unless you're an energy company, energy is a distressed purchase for all FM's customers. So why would they do anything? It's because it's a significant cost or there's a compliance issue. But what action should they be taking? Well, unless you monitor it and understand the consumption, understand where it's going, actually, how do you know which to focus on first? So if you can help your customers, or an FM provider help their customers, or the customer understand themselves where and exactly how that energy is being used, you're in a much more advantageous position to be able to take action much more quickly and much more effectively.
Who's eligible to benefit from the Revolving Green Fund?
In reality, any organisation can be eligible for the Revolving Green Fund. Two main criteria of the Revolving Green Fund are that the projects that you are wanting this cash for should be environmentally friendly, green, but also whatever works you're going to do will have an impact on energy consumption and energy reduction.
So I suppose that what those energy projects end up being will be determined by what their consumption requirement is and what's appropriate for them, and really we're there to help guide them through that process so that the projects and the work that gets funded is right for that business. The type of businesses that we're working with vary in terms of hard FM and soft FM. So we engage with clients that work in transport and rail right the way through to the NHS, and retail businesses that want to really micromanage their process and production lines. So we're really fortunate in terms of the clients that we've worked with, so nobody's precluded.
It really doesn't matter what sector or what type of customer you are. We wanted to be as encompassing as possible, open to as many customers as possible. But again, our experience tells us the larger end medium customers and the corporate customers typically get better value from doing a Revolving Green Fund project. Just because their energy bills are larger, they typically have more sites they can spread across measures. But look, I wouldn't say preclude anyone, but come and talk to us.
As I mentioned before, the utilities team are the guys that take the risk here, not the energy provider, but the utilities team. So they would carry out a due diligence on the client organisation to check that they are good for this risk which they're taking, and subject to them being seen as the utilities team as a good risk or no risk, then there's absolutely no reason why they couldn't be considered for the Revolving Green Fund.